Welcome to Fiscal Voyage. My name is Felix, and today's video we're going to do a 5-minute stock analysis on Discover Financial Services (DFS). This was suggested by Stoyan. I hope I'm pronouncing that correctly. Thank you for suggesting this company in a previous video of mine. If this is the first time you're visiting my channel, make sure to subscribe for more videos like this where I do 5-minute stock analysis on companies to determine if it's a buy, hold, or sell. Leave a comment below as well with a ticker symbol and company name that you would like to see next. So let's start with 5-minute stock analysis on Discover Financial Services. We're going to determine if at current prices if the stock is a buy, hold, or sell. Coming right now. Okay, let's start with the 5-minute stock analysis on Discover Financial Services in the New York Stock Exchange as DFS. The company is an American financial service company that owns and operates Discover Bank, which offers checking and savings accounts, personal loans, home equity loans, student loans, and credit cards. They also own and operates the Discover and Pulse networks and owns Diners Club International. Discover Card is the third largest credit card brand in the United States, measured by cards in force, with nearly 50 million cardholders. I personally don't have a Discover card. I'm more of a Visa guy. But nevertheless, let's continue. Fundamentals: the company grew at a compound rate of 5.29% from 2009 to 2018. And net income grew at an 8.87% rate from that same time period. However, revenue has been increasing over the past 5 years at a 6.02% rate, so it's actually better than the 10-year average. But net income has decreased from 8% to 4% in the past 5-year average. However, earnings growth is astounding 66% from 2009 to 2018, so that's a great earnings growth. It has been slowing down recently with a 5-year average of 12.36, but still 12% earnings growth. I'll take that anytime. The company has a credit rating of BBB-, which is investment grade. It's on the low side there, but pretty good still. If we look at 2018 adjusted earnings, the company reported $7.81. Net margin came in at 25%, and return on equity at 25.74%. Debt to cap is pretty high there at 67%. Currently, the company has a dividend yield of 2.08%, which is slightly higher than the 5-year average of 1.93%. So based on this, it's kind of fairly valued to undervalued. Just continue watching and we'll see how undervalued or fairly valued the company is. Currently, they have a great payout ratio of only 19.43%, which is very low. So as you can see here, the 5-year dividend growth rate at 12.80%. So based on the low payout ratio, the company could continue growing the dividends at a nice double-digit rate as the 5-year average. And they've been growing it for 9 years consecutively. Net margin has been expanding versus 2017 of 20.52%, which last year was 25%, and for 2019 they're expecting to be slightly higher net margin. The charter rule comes in at 14.88, which is great. I like to see companies 11 or 12 or greater, which is the 5-year growth rate plus the current dividend yield. And the most recent dividend increase came in at 10% in July of last year, so that's pretty good, double-digit dividend growth rate. Analysts expect 2019 earnings to come in at $9.08, which is much higher than 2018 of $7.81. So that's great. That's that double-digit growth there. 2020 analysts expect $9.51. So continued growth. That's what I like to see when I invest in companies. Earnings growing, therefore translate to more dividends growth. CFA has a projected earning growth for the earnings per share at 8%, and my dividend yield return model projected return of 15.3%. That's outstanding. I like to see companies at 9 to 10% or greater, and we got here 15% projected return. And I actually agree with this this model here. So let's continue. Currently, the company has a P of 9.3 with a forward PE based on the 2020 expected earnings of 8.8, which is very low compared to this 5-year average of 11. So that means that the company is undervalued based on this matrix. If we look at the fast graph, the black line is the monthly closing price, the blue line the normal PE of 10, and the orange is the earnings with a PE multiple of 15. As you can see here, the black is under both of them, so that means it's undervalued based on the fast graph chart here. If we look at the next slide, the fair value price, CRFA has a fair value price of 102, Morningstar at 89, Fast Graph at 98, as we saw in the previous slide, Yahoo at 93, and my dividend discount model analysis at 64. Averaging out the 5, we get a fair price of $89.63. And currently the company goes for $84.44, which means it's undervalued by 6.14%. Normally I like to see company undervalued over 10% or more. Gives me a safety margin. But this company is a great company. You know, it's a big company. So like Warren Buffett likes to say, you know, it's better to buy a fairly valued company that's great than a undervalued company that's, you know, decent. So with that, I have a recommendation as a buy. The company is growing at a great rate of 8 to 10, 11%. Very safe dividend with a low payout ratio. The dividend growth is amazing. You know, double-digit growth rates for the past 5 years. I see, you know, the margin of safety is really the only thing that's concerning me based on the 6% on the valuation. But like I said, it's a great company. You know, it's something that I will recommend buying. I currently hold Visa and American Express, but other companies like MasterCard, as well as this one, Discover, are great companies to have in your portfolio for the long term. There's really nothing not to like about this company currently. So with that, I have a buying recommendation. So if you have a company that you would like to see next, please let me know the name of the company and the ticker symbol in the comments. Thank you for watching, and if you find this video informative, please hit the like button, subscribe to my channel for more videos like this. And don't forget to check out the portfolio, my portfolio, which there's a link in the description below. Have a great one.